Hi, Ryan. Let's talk assumable mortgages. We are seeing more homes that are coming to market with the opportunity of for buyers to have that assumable mortgage transfer over to them. So we have an example for everyone today that we're going to discuss numbers because I think that's a really great opportunity for you to see real world what it's going to look like for you. Not only how it works, but what the down payment is on something that like an assumable mortgage on a home that we're going to discuss that is listed in Mesa for 475,000 today. So Ryan, I'm going to let you dive right into this.
Yeah. We covered assumable mortgages in detail with Tip Tuesdays last year, and we got a lot of great response and questions on it. But interest rates are still elevated, so we're still getting a lot of questions on these. And I just wanted to kind of go over again as a refresher what an assumable mortgage is. It's when a buyer purchases a home from a seller, and the current loan on the home being purchased gets transferred to the new buyer. So it's a new mortgage. It's not a new mortgage, rather, a new mortgage isn't started. The current one is really just transferred. So this has become really popular just because rates were so low in 2020 and 2021. So if someone wants to sell their home and they got financing during this low rate period, a new buyer, could come along and take over the mortgage in possibly like the 2 or 3% range. But as you mentioned, Danny, what we're going to do today, we really wanted to go over the details of like a real life listing, just so you could kind of see the numbers. So there was a home that Dana and I went through, and it was listed in Mesa, as you said, for 475,000. And on the listing remarks that they disclose in there assumable FHA mortgage at an ultra low 3.125% interest rate. That's exactly what it showed. So just for comparative purposes, the current FHA mortgage is in the low sixes right now. So it's a really big difference. So when we see a home that has an assumable mortgage with a great rate, the first thing that we do need to know is how much is currently owed on that mortgage that you're assuming. Sometimes to know exactly how much the current loan amount is, it's either showed on the listing, right next to, assumable and what the rate is, or you do have to contact the agent. But I did confirm on this one that the loan amount on this mortgage is 410,000. So, if you get approved for an assumption, as I mentioned, it's not a new loan. You just take this one over, that 410 loan amount at that ultra low, as they said, 3.125% rate. So this would get you a total payment, just for my calculations, is $2,280. And that's what they call PITI, principal, interest, taxes, and insurance. That's the whole thing. So, as we discussed before, one downside to these assumptions is really the gap between the purchase price and that assumed loan. So using this exact example, the home in Mesa, 475, and you're assuming that 410 loan. So the gap that you're having, the difference between the price and the assumable loan is 65,000. So, not everybody has 65,000 to put down. So if that's the case, what you would need to do is get a second mortgage. Having a second mortgage requires you to bring 10% down, and you have to put that down from 475. So, if you want to go to this option, assuming a mortgage and getting a second, you'll have to put that $47,500 down. So the second mortgage that you'll be getting, it's going to be a lot smaller. It's $17,500. And just kind of, I looked up rates this morning. They're in the mid eights on a second mortgage, usually a 20-year term. So that $17,500 would be about $150 payment. So with the assumption option, with that second mortgage, the payment would come out to be about $2,430. So just crunching all these numbers on this real life example. So I wanted to compare that to what a new mortgage would be at today's rate. That payment, if you're just putting a minimum down, is $3,285. So it's an $855 difference. That's big. That's huge.
That's
So,
huge.
in this real life example, yeah, you could see why assuming a mortgage has become so popular. I know this is a lot of numbers to throw at you, but if it's something that you're interested in, Dana and I could go over any information on the listing that you find that does have an assumption and make sure that it would make sense.
Absolutely. And like we mentioned in the beginning, there are quite a few listings now that are showing
Yes.
assumable mortgages as an option. And Ryan, help our audience understand too, FHA, VA, conventional, what qualifies as an assumable mortgage?
Most of the time, all government loans do qualify for an assumption. So FHA, VA, USDA, which is rural housing, zero down, those typically always qualify. The ones that aren't always qualified is conventional loan. There's a lot of conventional loans out there. So some of them do, but I would probably say the majority don't. So if you have a government loan, like on this example, FHA, most of the time assumptions are available.
And all a seller needs to do is call their whoever they have their loan through and
Yes.
find out if this is an opportunity for someone, correct?
Absolutely. Yep,
Okay.
just your general customer service number that you'll see on your statement. You can just call them and give them your loan number and say, hey, we're going to be selling this home. Is this assumable? And if they confirm yes, you could put that on your listing and market it because it's you know, in this market that really attracts a lot of buyers because you know, there's a lot of buyers agents such as yourself that looks for these things because wow, you know, get a 2%, 3% rate in this market. That's a big selling incentive right there.
100%. Absolutely, Ryan. So thank you for sharing with everyone those numbers. And if again, if you guys have any questions, please reach out. Always like and subscribe, and we'll see you next week.